Hey, we're looking at an analysis of Navitas Semiconductor, specifically that dramatic V-shape intraday recovery NVTS had on Friday, November 21st.
Yeah, that B shape. The whole NVTS saves the day idea it's a great narrative hook. It gives you that immediate emotional hit.
It does.
But my first question, looking at the structure, is about connecting that intense immediate price swing with the company's long-term fundamental story. We need to make sure they're not just two separate ideas.
I completely agree, and that's our first big opportunity here. The material does a good job laying out the data points, right? You get the open at $7.45, that shocking drop to $6.85.
A real stomach churner.
And then the close back up at $7.56. And then later, it gets into the financials, the Q3 revenue, and that all-important $150 million in cash.
Right. So here's the first topic sentence. The explanation of the V-shaped recovery mechanism could be strengthened by integrating the fundamental analysis directly into the narrative of the low point.
Okay, so you're saying they're treated as two separate things right now.
Exactly. You get the scare, which is the price action, and then you get the why, which is the fundamentals. But they feel like they're in different chapters.
I see that. It says here the cash pile is likely what gave investors confidence. That phrase, is likely, it's a bit soft, isn't it?
It's very soft. It makes the recovery feel like, just a lucky break or a sentiment shift. A psychological win, not a mathematical one. The weakness is that causality isn't nailed down.
It's speculative. It suggests the buying was just a general feeling rather than a calculated defense of a specific valuation.
Precisely. So the suggestion is causal clarity must be established by linking the floor valuation to the cash position when discussing the 6.85 low.
So we move away from likely and more towards this is why it happened.
Yes, we need to assert that the market was making a calculation in real time. The idea is to build that causal bridge and make it just unavoidable for the reader. It gives that NVTS saves the day title some real financial teeth.
That makes sense. But, how much can we really assert that? We don't know the exact order flow. We're talking about high-speed trading. Can we really say with certainty they were defending that exact cash level?
That's a fair point. We can't see the individual orders, but we can frame the implication for the reader. So here's a concrete example.
Okay.
At the moment the script discusses that day's low, that's 685. That's when you have to explicitly state that this price point brought the $150 million cash position into really sharp focus.
Especially against the $1.7 billion market cap.
Exactly. It's not just a number on a balance sheet anymore. It's a clear, defensible safety net. And framing it that way reinforces that the turnaround wasn't random. It was a calculation about solvency.
It turns a technical bounce into a fundamental stress test. I like that.
And to make it even more explicit, we can frame that whole $60-80 to $7 range as the zone where the market decided something crucial.
What's that?
That the risk of bankruptcy or, some immediate crippling dilution, it just isn't justified right now. Why? Because of the cash. It turns the V-shape from an emotional event into an economic one. It's a rational defense of the balance sheet.
Okay, I think that's a huge improvement. Making that 685 level about a real calculation. It changes the whole story from just volatility to resilience.
Right.
But that raises the next question. We've established the floor, but what about the ceiling? And that brings me to the second critique I see here. There's this tension in the piece.
As a structural tension?
Yeah, between the immediate tactical win of that day and the huge multi-year story. The gallium nitride, the AI data centers, the $13 price targets.
I see that too. So the topic sentence here would be, while the immediate tactical analysis for the following week is strong, the material needs to more clearly bridge the gap between the intraday volatility and the long-term growth story driving the $13 targets.
Yes, the script does a great job asking that big question. Is NVTS a $4 stock or a $13 stock? It frames the stakes really well.
But then the conclusion.
The conclusion shrinks the focus right back down. It becomes almost exclusively about the immediate trading levels. Breaking 780 resistance, setting your stop loss at 685.
Right. It answers the question, how do I trade this next week perfectly?
Perfectly. But it sort of forgets to answer the more important investor question, which is, why does this one day, this defense of 685 even matter for the potential of a $13 stock a year from now?
That's the weakness. The focus on next week, kind of. It dilutes the relevance of the bigger picture. All that great stuff about GaN chips and AI power efficiency, it gets lost.
So the core argument is that this is a potential game changer, but the conclusion is just about a short-term trade.
Exactly. So the suggestion is to use the resistance levels discussed in the conclusion as strategic milestones toward the average analyst target, firmly reconnecting the short-term win to the long-term potential. We need to shift the mindset from a simple breakout to an investor's validation.
Okay, elevating a technical hurdle to an institutional signpost. How do we do that? Let's get concrete.
Okay, numbers. When the script talks about that potential run to $8.50, it shouldn't just talk about $7.80 as a technical hurdle on a daily chart.
It's more than that.
It's much more. You frame that break of $7.80 as the technical confirmation required to start confidently targeting the average analyst target of $8.46.
I see. So you're linking the tactical move directly to the institutional consensus.
You are. It stops being about one day's chart and starts being about reclaiming what the street thinks is fair value. It gives that 780 level so much more meaning.
I really like that. It gives the reader a reason to care about that price point beyond just the next few hours of trading.
And then, to tie a bow on it, at the end of the forecast section, it needs a really decisive forward-looking statement. It should contrast that 685 defense with a $13 target.
So you're saying Friday wasn't just a daily win for the bulls?
It was the day that saved the $13 possibility. That's the crucial takeaway. If that stock had closed below 685, the long-term story would have been seriously damaged. You might have triggered institutional stop losses. Making that structural weight explicit is what justifies focusing on this one single day so intensely.
That is a very strong claim to make, that one day's trading saved a multi-year target. But I suppose if we link it back to your first point,
We have to.
about the cash position being the floor.
It's totally justified. The drop was driven by fear of cash burn, so the defense had to be justified by the cash position. When the market defends the balance sheet like that, it's protecting the long-term thesis. A failure at 685 would have meant the market thinks the burn is too fast and the 2026 story is off the table. That's why that V-shape is so significant.
Okay, that clarifies so much, the structural weight of that defense. Excellent. Now, let's move to the third major opportunity here. The tone of the piece right now is very celebratory, A victory for the bulls.
It is, and that's fine, but to make that victory feel earned,
You have to engage with the other side.
you have to. So the topic sentence for this one is, the tone requires a more rigorous acknowledgement of the significant growing pains to make the eventual bullish conclusion feel earned and comprehensive. A really convincing analysis doesn't just present the bull case, it shows how the bull case survived the bear attack.
The material does mention the risks. It's pretty upfront about the Q3 revenue being, quote, down significantly, YOY. It talks about uncertainty and growing pains.
It lists them, but when it comes to the actual event, that morning drop, it just attributes it to general selling pressure.
Which is weak.
It's very weak. The negative data is there, but it's not being leveraged as the cause of the drama. The weakness is that the script relies too much on the cash as the solution without fully connecting the negatives, the revenue drop, the inventory issues, the cash burn, as the explicit source of the fear that drove the stock down to that low in the first place.
In that bear target, the 420 number, it's mentioned, but it feels a little out of context, like an external threat rather than an integrated risk.
Right, the reader needs to understand that the drop to 685 wasn't random. It was in the moment completely justified by the bad news.
So the suggestion is to make the fundamental weaknesses the engine of the morning's volatility.
Exactly. Explicitly assign the fundamental weaknesses, like that Q3 revenue drop, as the direct catalyst for the morning sell-off. You have to show that the market tested that weakness before the V-shaped recovery could even happen. It gives the defense of 685 real stakes.
So you'd actually need to rewrite the start of that price action section.
You would. Instead of saying something passive like selling pressure kicked in, the piece could say something much more active.
Such as?
Something like, the market aggressively priced in the immediate risk from the significant YOY revenue decline and the ongoing inventory corrections. This relentless pressure is what drove the stock down until it hit its technical and fundamental floor at 685.
That connects the fear directly to the price. It's cause and effect. That's a huge improvement. It feels less like reporting and more like true analysis.
And one last thing on this. To really integrate the bear case, when the script discusses the split analyst ratings, it should briefly contrast that bear's 420 target with the real risk.
The risk of unsustainable cash burn.
Yes, if the turnaround is delayed, don't just mention the 420 number, use it. Ground that low target in a real financial risk, because paradoxically, when you do that, the subsequent defense at 685 feels like a much more significant, much more heroic victory for the bulls.
I see. So the writer is essentially framing it as the market threw the entire bearish argument at the stock, and the $150 million cash position passed the stress test at $6.85.
That ties everything together.
It really does. It makes the entire narrative more cohesive. Okay, so we've drilled down into 3 really significant structural opportunities here for strengthening this analysis. Just to recap them quickly. First,
strengthen that causal link. You have to move beyond speculation and explicitly connect the $150 million in cash to the calculated defense of the $6.85 low. Make it an economic necessity, not a psychological accident.
right. Second, elevate the tactical analysis. Connect those immediate breakout levels like $7.80 to the strategic long-term analyst targets, the $8.46 average, the $13 potential. The short-term action has to serve the long-term thesis.
And you have to reinforce that the recovery on Friday is what saved that maximum potential.
And third, the script needs a more robust argument. Integrate the negative fundamentals, like that Q3 revenue drop, and make them the explicit driving force behind the morning's sell-off. Show that the bullish recovery was earned by surviving a legitimate market stress test.
Exactly. So we'd encourage you to implement these high-level revisions. The real focus should be on making the analysis structurally sound, making sure every single price movement is accounted for, with a clear, calculated justification.
The piece is already compelling. This will just maximize its analytical rigor.
It will. This is strong work, and these changes will just take it to the next level. We look forward to seeing the revised version submitted for further critique.